Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today on the back of news floor and the back of technicals. And now on the technicals, we're joined by Sameet Chavan, who's the head research, technical and derivatives, Angel One. And from a research team, we are joined back by Ansh. So let's resume with all the stocks that continue to be in focus. One such stock is Apollo Hospitals, and it is in focus on the back of the fact that they have entered into a long-term agreement to build and operate a 500-bed hospital in Worli with a capacity expansion within the next 4 years with an investment of 1,300 crores. They also propose to expand the existing hospital facility in Lucknow to 500 beds from the present 300 beds with an investment of 325 crore rupees. On the back of these expansion plans, Apollo Hospital is in focus today. It has recovered from the day's lowest point, but nonetheless it's still trading with cuts of 1% given the market breadth.
All right, that's about Apollo Hospitals. Moving on and sticking with the healthcare space then, let's also talk about Dr. Reddy's because the results are due tomorrow, and what we are expecting this time is expected to be a decent set for Dr. Reddy's. Not much excitement is to be seen because for the US sales, they're expected to decline 2% ex Rev limit on a quarter-on-quarter basis. This time we are factoring in $419 million of their US sales. In this, the G Rev limit contribution is expected at $130 million. While for the India business, that's expected to grow on a double-digit basis. 19% jump is what we are expecting, and organically that's expected to grow 11%. If we talk about the contributors, then definitely the organic contribution will be there, but other than that, the contribution from the in-license deal from Sanofi as well as Bayer are also expected to help the India sales. All in all, on the profit figure, we are expecting a jump of just 2% sequentially. 1,423 crores is what we are expecting. Revenue expected at 7,754 crores, and the margins expected to be at 28.1% this time around, and that will be the key number to watch out for because from the likes of Sun Pharma as well as Cipla, the margins was indeed a surprise, but the management commentary was not that enthusiastic to help the stock movement. But for Dr. Reddy's, all eyes on the management commentary as well, whatever they update on new launches as well as what is their strategy with respect to China markets as well.
All right, that's Dr. Reddy's, and the next counter is M&M. Just the two counters out of the four counters that are now holding on to the shade of green in the Nifty 50 pack. So coming to you, Ansh, M&M, the top Nifty gainer, of course, in the back of the auto sales numbers. Tell us what do the numbers look like?
Yes, the company's total October sales is up by 20%. If we talk about the domestic SUV, then that has actually crossed that 54,000 mark, which is up by 25%. If we talk about total tractor, then this sales has also given a good uptick of 30% to cross that 65,000 mark. Also, the Mahindra Auto has recorded highest ever SUV sales. Their farm equipment sector has also recorded highest ever tractor sales. We also have a brokerage note. Kotak Security has actually upgraded the recommendation from add to buy, but they have trimmed the target price from 3,300 to 3,150 mark. Also, if you see on chart, then the stock has actually surpassed above that 100 EMA, advancing for third consecutive session, which is positive for the stock.
All right, then that's about M&M, but let's also talk on the technical parameter. How is M&M looking? And Sameet, coming to you for your first talk. A very good afternoon. Help us understand how you're looking at M&M on the technical front, because this has been one of the strong candidates, I would say, within the auto space. But do you anticipate more up move in this stock?
Good afternoon. The entire auto space, if you see in the recent past, has undergone some sort of price correction. But if you see M&M in last 3-4 days, has been bucking the trend. So it seems that at least for a while, this stock has taken a support around its important cluster of 2,700, 2,650, and it has already rebounded from those important levels. It is now challenging its 20-day exponential moving average, placed around 2,900, 2,920. So if we see any kind of follow-up move from current level in probably next couple of days, we could see a continuation of this move. But surpassing 3,000, 3,100 in coming days would be a challenging task for this particular count.
All right, coming to you, Ansh, again, a name from the auto pack, Maruti Suzuki, that has also reported its sales numbers. Take us through the auto sales numbers for Maruti as well.
Yes, and when this company has recorded its highest ever sales volume in October. The total October sales is up by just 3.6% to cross that 2 lakh unit mark. But the total domestic PV sales has gone down by 5% from 1.68 lakh unit to 1.59 lakh units. But if you talk about the total export, that has actually jumped by more than 51% from 21,900 directly to 33,168 units. Talking about the total domestic sales, that has actually gone down by just around 2.5% from 1.77 lakh to 1.73 lakh. But if you talk about that chart structure, then that has actually given a good move on upside, but due to market pressure, it seems to be in a bit of pressure today.
All right, certainly, that's Maruti Suzuki having a loss of 1% in trade right now, and how the numbers were panning out, Ansh just told us about that. But let's also talk about BPCL, and Sameet, what we are seeing is that the stock is once again retesting that 300 odd levels, and the entire space actually is a bit under pressure in today's trading session. What exactly are you spotting on BPCL? Are you hoping for a rebound from these crucial levels?
Doesn't look like, in fact, since last 4 to 5 trading sessions, the stock has been continuously moving below its 200-day simple moving average. If you see today, today's high also coincides with that important hurdle. So till the time this stock remains below 310, 350 on a closing basis, it is likely to face selling pressure at higher levels. So overall, if you see its trend on the daily time frame chart, it has been maintaining a structure of lower bottom and lower highs. So at least in the near term, the direction remains on the downwards, and any bounce back is likely to get sold into. Any follow through selling probably to break important support of 298 would extend this correction towards 285, 280 levels.
All right, moving on then to the next counter, which is Tata Motors, that is in focus today. Tata Motors, of course, is in focus today. In fact, the price was slumping today in the morning as Mahindra & Mahindra continues to outsell the Tata Group auto manufacturer for the second straight month in maintaining its position as the third largest passenger car in the country. However, the analysts at Morgan Stanley remain upbeat about the stock's performance. In fact, Morgan Stanley maintained its equal weight rating on the auto giant with the target price of 1,178 rupees. The target indicates that around a 40% upside from the stock last closing price of 843 rupees. The jump in the US retail sales is seen as a positive development for Tata Motors, especially considering the automaker's recent challenges. Earlier in October, also JLR reported a 3% dip in the Q2 retail sales due to the supply chain disruptions. And domestically, Tata Motors total sales for October stood at 82,682 vehicles, slightly ahead of what the analysts were expecting, but flat when compared to the previous year's figures. On the back of that, Tata Motors is seen declining with a cut of 2.7%.
All right, that's about Tata Motors. But moving on, let's also talk about Bajaj Auto then within the auto space, and we just discussed how the numbers were in the month gone by. But Sameet, this stock has been correcting very much after breaching that 10,000 odd mark. It's now sitting at 9,500. How do you see the stock on the technical front? More weakness to come up for Bajaj Auto?
See, clearly, technically, this stock has been, weakest counter within the auto space in last 1.5 months. Stock has corrected quite sharply from the levels of 13,000. So that becomes, nearly 30-35% correction in such a short span. It is now challenging its, crucial make or break level of 200 simple moving average, placed around 9,450 odd levels. So it would be important for this particular counter to at least, take support around this important support and then consolidate for some time. So at least in the near term, we would expect some consolidation, wherein 9,500 to 9,300 would act as a very strong support. On the higher side, it would be a daunting task for this particular counter to surpass 10,500. So there's a band of 8 to 10% at least in the near term. But in case if the stock extends this, weakness and slides below 9,300, then we could see a sharper correction towards 8,000 as well.
Well, all right. Moving on to Subramaniam Krishnamurthy, Executive Vice Chairman, and Paramasivan Srinivasan, who's the MD of Afcon's Infrastructure. Sharing their outlook for the company. They have also shared what they expect to maintain their outstanding margin performance going ahead. Let's go across and listen in to company's growth roadmap ahead.
A revenue growth rate of 18% in the last 18-20 years. And that is what we hope to maintain going forward. FY25 would be more or less equal around what we have achieved in the past. We have achieved a EBITDA of 11.6%, which is the highest in the industry. Our attempt is to maintain that and even attempt improvements.
Exports we would like to have on a continued basis about 30% and 70-30 between domestic and exports would be our desired ratio. Temporarily it could have a blip or it could go up, whatever, but on a sustainable level we believe 70-30 could be a good ratio.
Alright, that was the management of Afcon's Infra, but for this viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back with more news and updates.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks in focus today on the back of news flow and on the back of technicals. So let's get started yet again with all the stocks that are in focus. Escort Kubota is in focus on the back of the auto sale numbers. It has recorded its highest ever monthly sales in the month of October. In fact, the tractor sales were up 19.8% on a year-on-year basis to 18,110 units versus 15,113 units on a year-on-year basis. The construction equipment sales were, however, down 3.6% on a year-on-year basis to 635 units versus 659 units. So net a good set of numbers coming in for Escort Kubota as far as monthly sales are concerned, but nonetheless Escort is also mirroring the market. It is trading with cuts of 1.8% as of now.
Alright, that's about Escort Kubota recovering from the day's lowest point, but along with that, let's also talk about one of the strong candidates in today's trading session, and that is indeed Naukri. Info Edge, that the last time I checked was up in trade today, that was holding on to the gains of more than 2%, and what the data is suggesting is that because of the jobs peak index, there's been strong hiring trend that was seen in the October month, when the index is up 10% on a YY basis, and the index was up 6% in September month, having declined in 3% YY in August. Now, there's been a strong improvement in the IT as well as in the non-IT hiring activity. Now, the key sector indices from the likes of IT, energy, FMCG saw robust expansion, growing at 6%, 18% and 8% YY respectively. Other than that, the auto hiring index was also up 5% YY. Banking index and the financial index did decline 2% YY, but not much of a decline over there. And the hiring trends overall were especially strong in the AIML and the GCC jobs. So all in all, because of the strong reports job data in the month of October, what we are seeing is Info Edge holding on to the gains of more than 2% right now.
All right, Info Edge bucking the trend for the market. But coming to you, Sameet, Grasim is what you have picked out for us, seeing consolidation in the last 1 month. Tell us, is it time for the stock to move now?
Yes, as you rightly pointed out, the stock has been consolidating since last month or so. But it seems that it has succumbed to the broad-based selling that we have been witnessing since morning. Stock is on the verge of a breakdown from its recent concession phase. So 25.50, 25.70 is the level to watch out for. In case if the stock slides below this important support, we could see a breakdown happening on daily time frame charts, and then probably the stock can slide towards 24.80, 24.20 kind of level. So overall, at least for now, the stock is trading around its important support level. If it, as I said, breaks below 25.75, 50, it would confirm a breakdown.
Alright then, moving on, let's now talk about Hyundai Motors, because just after the listing, it's been the first month where the company is now coming out on the bourses and posting their monthly sales data. And Ansh, take us through how are the sales data for the month gone by for Hyundai Motor India?
So the company has recorded its third highest monthly sales since its inception. Also, their October total sales is up by 2% from that 68,700 mark to crossing that 70,000 mark. But the total sales is up slightly by 0.8%. If we talk about export sales, then that has given a good jump of more than 6% from 13,600 to directly 14,500 units. Also, they have actually registered highest ever monthly SUV sales and highest ever CNG sales of 8,261 units. So good set of numbers in line with the expectations, but due to market pressure, the stock is slightly in red.
All right, moving on to the next counter. HPCL is the name that you picked out for us, Sameet. Consolidation again in the last 1 month. Do you see an up move from here, or do you see a breakdown coming in on this counter?
Very identical chart structure, that we discussed about VPCL, while back. Stock has given a, breakdown from its bearish pennant pattern. Although it is, challenging its 200-day simple moving average. Once this stock slides below 364, we could see continuation of this move. Next important cluster to watch out for would be around 350, 340, and on the higher side, 385, 390 would act as a very strong resistance.
Right, that's the day coming in on HPCL. But with this, viewers, we are timed out in this edition of Market Fatafat. Thank you so much, Ansh, Sameet, as well as Forum earlier for joining us today and highlighting all the buzzers in trade right now. But it's time for me and Ankita as well to take a leave. But before that, amidst the volatility in the market, what are the pockets of opportunity for investors? We posed this question to Ramesh Thamani, Nilesh Shah and Vijay Kedia and even Sunil Singhania to hear out the big themes these market gurus are betting their money on.
One theme that I've been extraordinarily bullish upon is this, what we call digital public infrastructure theme. India has become a digital country. We've almost leapfrogged a generation of bad, poor infrastructure by building a world-class digital infrastructure. So a lot of now companies are now participating in this, whether it's tax identification services, PAN services, ONDC services, many of those pieces. Then there are maybe half a dozen companies that benefit from this infrastructure play out. So I would first suggest that investors look at this not necessarily from a 6 months or 1 year or 2 year horizon, but from a 5-10 year horizon. It's a long-term story, and the market caps don't reflect the opportunity that we see in digital public infrastructure. So if you're looking at new investor, looking for new themes, I would suggest you put some money into digital public infrastructure and some pharma companies which have some intellectual property.
And I clearly see that markets like China have witnessed that when you go from $3,000 to $10,000 per capita, you're clearly seeing huge amount of spend go up on the BPC side. And if you get the template right, if you have the playbook right out there, I think you could have a potential wealth creator. I mean, we saw these in the 90s where a lot of FMCG companies rode on the basic staples, what we talk as the soaps and the shampoos. It's now, I think that's now a mature category. You now got to move on to the BPC side. And that's where I clearly think there's a very big, powerful mega theme which is likely to emerge in the next 5, 10, 15 years.
I will tell you that I am bullish on Chinese shares. I think that China is the new story. I think China is the new theme. And I think this Chinese stock should do well going forward. For 15 years, they haven't done anything. You just imagine, even Hong Kong index was some 32 or 34,000 in 2008. Yes, it's still hovering around 22,000 or 20,000 or something. And in 14 years, and we are, I don't know, 8 times plus or 9 times plus, we don't know. So people have written off China. I have already put 2-3% or maybe 2 or 3%.
This whole transition towards renewable, battery storage, which is BAS, and hydrogen, and so many other nuclear is coming back. I think it is very clear that the demand for fossil fuel will not be great, and in fact, it might start to peter off, and which would mean that oil structurally seems to be on a downward slope. And I think nothing can be better for India, and I would say that would be the mega theme for India as an economy.
Transition towards renewable is, yes, the renewable companies will grow, but you have to be cautious. How sustainable are those earnings? And what are we paying for those earnings? And as I had said earlier, at least in terms of power generation, the existing utilities, large utilities that are able to borrow at cheaper rates than their peers, I think they should be the winners in the marketplace, and that is what is being experienced also.
Definitely, CDMO is one space where a big opportunity is opening up right now. Only thing is, we are unable to judge at this point of time what the timeline could be, because the Biosecure Act in US has left a window of 7-8 years for the Chinese companies to continue supplying. And if there is going to be any further dilution, then that remains a risk. But otherwise, from a pure commercial and economical sense, it makes all the sense for the companies in US to start diversifying their global supply chain. So in a way, this is also a China plus one play. I think capital markets last 3 years have done well, and the numbers are there. The kind of flows mutual funds are getting, all that is getting baked in. But we believe this is not the end of the story. This feels like this is going to have a long runway. We are still at about unique around 9-10 crore kind of demat accounts. I think that number has to swell to 20-25 crore by the turn of this decade, and that will mean the sustained growth. So there will be a lot more beneficiaries coming out of this sector, capital markets place. We like wealth managers, but there are other plays like exchanges, brokers, discount brokers, market infra companies. Those are all reporting good numbers. That should do well. We do like insurance as well. Insurance has had a bad 5 year. Of course, last 6 months have been good, especially on the general insurance side, because the competitive intensity has finally abated.
My sense is that, and I believe that, in this cycle is more for the capital marketplace, because you have to follow where the money is. So if the retail household guy is not putting money in deposits and putting money in SIPs
markets,
or mutual funds, then you are better off buying a capital market plays, and I think those have done far better than betting on banks. In the long run, premium real estate will do phenomenally well, because Indians are getting wealthy, and the stock market has made so many promoters and founders wealthy, and people do like real assets, whether we like it or not.
Absolutely.
When they make a lot of money in the stock market, they want to
Absolutely.
take some money out and buy a couple of houses or flats and park their money there.
Absolutely.
So I think real estate is by far, in my view, one of the best ways to play premium consumption.
If you like this video, then like, share and subscribe to ET Now.